Good morning, everyone. How's it going? It's good to see you. I'm getting off to a late start because I woke up later than I normally do. So I haven't taken a look at anything at all. So we'll get to see how the world is waking up and how the markets are looking together. Let's go ahead and start that process. And we'll start with our normal place, which is the futures. So it looks like so not the randomness, random in the S&P and Dow, but we are down significantly in the Nasdaq. That's really interesting. So this is about a quarter of a percent. This is about a quarter of a percent. Actually, no, this is more getting closer to 0.5%. So it looks like the Nasdaq is dragging down the S&P 500. So the normal order of things is you've got the Nasdaq, and then you've got the S&P 500, and then you've got the Dow. And so the S&P 500 is the average of both of those because Dow Industrials focuses more on the industrials type of stocks, and then the Nasdaq focuses more of the tech type of stocks, and so the S&P 500 has everything. So it makes sense that normally the S&P is in between these two. What we're seeing here is that Dow is down about quarter of a percent, but the Nasdaq is like 0.75%, so three times as much. And the S&P is splitting the difference at about 0.5%. So the Dow is not down significantly. The S&P 500 is approaching the point where it's non-random, it's significant, and the Nasdaq is really dragging that S&P 500 down. So that's really interesting to note. That definitely gives us a downward negative bias, uh, independent of the actual direction of everything, because the defensive sectors are outperforming. So this is the same thing we've seen in the last couple of sessions, but today it's really pronounced. And yesterday we had it, but it was on the upside, and we were saying, hey, that's an indication of weakness. And here we are today with that weakness continuing and showing a little bit more obviously in the negative direction. So we definitely want to be careful. So there is a negative bias in the markets. If I look at S&P 500, well, we're seeing this chop fest consolidation, but we're going to start seeing a negative bias. Our lows have been very near or at or below the EMA 8 and the EMA 20. And so today we won't be surprised if we push down towards that again and maybe even break through it. We won't put too much significance in it breaking through it unless we close below, and then tomorrow we open below. Then we'll have a lot more significance to that. But for now, it looks like there is more downward pressure. And even if it was on its way up, for example, yesterday was up, but the defensive sectors are leading. We saw those Dow Jones types of stocks ahead, and just like right now, Dow Jones is stronger than the Nasdaq. So until we see the Nasdaq leading or small caps leading, we're not really going to believe in a strong upward movement. It might vary temporarily for a week or two, but we're not going to expect to make new highs in those types of conditions. When we're playing defense, it's not a time for markets to go screaming higher, right? We're playing defense because institutional money is concerned and is focused more on protecting their capital than they are on making money. So we are going to expect this weakness. It looks like for now in the short term, consolidation, and in the slightly longer term, a continuation of this downward trend, lower highs, lower lows. All right. Let's take a look at how bonds are doing. This is TLT. We'll probably look at so clearly down, very much down from yesterday. Yesterday was already, we had the same pattern, a gap down, and then mostly flat throughout the day. But today, we're going to gap down again, even harder than yesterday, it looks like. Yeah, even harder than yesterday. So yesterday, oops. Yesterday we had that gap down right well below that EMA 8, not even close to it. And now today we're going to gap down again right where this dotted, I don't know if you can see it, but there's this dotted red line right here. So near the lows of last week or the week before. So that is going to keep pressure on the NASDAQ. The lower the TLT goes, the more pressure there's on NASDAQ because bonds have a greater yield, and NASDAQ competes against the bonds for yield. If I'm a portfolio manager and I can get the same yield out of a treasury bond, I'm not going to go to a riskier NASDAQ stock to get the exact same yield. So as long as this heads downward, that's going to keep pressure on the NASDAQ. And this is actually the gapping down of the treasuries is probably why the NASDAQ futures are down so hard right now. Let's see what's happening in crude. Crude is not really doing much. Okay, so let's take a look at our sectors. So this week, again, we're going to be mostly focused on earnings, but we still want to see which sectors are performing better than others. Because if we are going to swing trade, we definitely want to be in the strongest sectors. And right now, we don't want to be looking in this longer term. We want to be looking in the shorter term. So right now, the natural order or sort order that my filter here has is not the way we want to be looking at it. We really want to be looking at about 1 week, 2 week, 3 week, or 1 week, 3 week, 6 week. I don't have that built in right here. Well, I guess I could change it real fast. Let's see, 1 month, let's go 1 week. And then 3 weeks. And then 6 weeks. Okay, so even on that basis, XLC is still leading, but we see XLE is very strong over here. And then the Dow Jones, you see that rising. It's rising above the S&P right here. So this XLK and XLC is still spillover from several weeks ago. So even the 6 week is probably a little too much. Let's go 1, 2, 3. Okay, weeks 1 and 2 will span the conflict, the Israeli-Hamas conflicts, and then week 3 will be just before that. So I might actually even just want to look on a 2 week basis, but we'll see how this. Okay, so real estate and utilities, we've seen that in the last couple days, those two really coming up. Let's just look purely on a 2 week basis. XLU, XRE, XLC, and K, it's still up there. And then on a 1 week basis, there we go. This is a little bit more what we've seen actually. So this is what I expected to see. I didn't expect on the 2 week basis for communications and tech to be so strong, although in the beginning we did see SMH super strong. So it sort of does make sense. Energies, real estate, utilities, that's really where we're going to be focused. And then if I look at SMH, just to verify, SMH did have that nice up day yesterday, bringing us above the MA50. We'll watch that closely, see how we react today with the NASDAQ down. NASDAQ is down so much, right? If NASDAQ breaks down below that EMA 20, but SMH remains above its MA50, I'm going to be really interested in looking at some SMH stocks. But if they both break down, then no, I won't be. And let's take a look at that. XLU. XLU did great. Again, we want to see the low above that EMA 20 today. XLP, we want to see the low above the EMA 8 today. and then XLRE. And XLRE is looking actually a little bit better than those two. So, but I do want to see the low above the EMA 20 today. We'll see if we get it because it looks like the S&P is being dragged down pretty hard by the NASDAQ. Okay, so let's take a look at some day trading opportunities. There's a lot of earnings. Earnings does give us opportunity to day trade. You just don't want to hold things overnight for sure. If you bleed into the end of the day and say, hey, well, I still like my position, but I haven't made a lot of profit yet, just close it. Or maybe I have a small loss, like I haven't hit my stops yet, just close it. Because with the earnings, it's not worth the overnight risk. Sometimes in day trading, you get to the end of the day and you haven't hit your targets or your stops yet. Sometimes you'll hold it to the next day. But in this environment, you definitely don't want to do that. So let's go with our normal Tesla. Okay, Tesla is still moving quite a bit. So I should draw my lines. Okay, and then we're going to look at Bank of America had earnings today. Yeah, so we'll, ooh, this one's a little messier, but let's do it. Okay, Goldman also, but I don't want to be into, and yeah, this is a lot messier than Bank of America, so we'll stick with Bank of America. And I realized that I needed to put it on a different chart. So I got to redraw my Tesla lines. Okay, and then Tupperware. That's interesting. That's not normally a stock that moves. So it's interesting that you see it's up huge. Right, this is a penny stock, but it is up 30 cents on $2. It's up like 15%. And it was up like 30%. So something's going on with Tupperware. I don't know what, but if you are a pro day trader and you like the fast action, and this is something that you've done a lot and you're familiar with, you would do something like Tupperware. But if you're just kind of dabbling in it, or it's not something that you do every day, it's something that you do every once in a while, or you can't sit at your screen and stare at it, then this is one you would avoid. And this is why. Look at how it trades during the day. What's that? I have several bars that are missing, that are just completely flat. This does not get a lot of activity during the day. And so for it to have this huge activity, look, it's more active here than it was during the day yesterday. You see that? In the pre-session, it's more active. So we will most likely get really active and a lot of action today, but this is how it looks normally. Very gappy, very spotty. It's like watching paint dry in a lot of this time frame. So like where the price didn't even move for like an hour right here. And then the last 30 minutes, 35 minutes of the trading day, when it's like the most active trading time period of the day, it just didn't even move prices. So for sure, you would day trade this only because you're not going to expect necessarily on a day-to-day basis that you're going to get a chance to get in and out. So some people specialize, like the really pro day traders, they will specifically look for trades like this or stocks like this, because when there's that sudden rush of activity, there's a lot of chance to move it. But I definitely would not trade something like this without level 3 or level 4 quotes. So without Bookmap or level 3 quotes from NASDAQ, I definitely would be avoiding this. So without actually knowing exactly where the orders are, then you don't want to be looking at things like this. Another example is probably Nokia. Yeah, you see that? Like these bars are just so, like especially right here in the last hour of the day, like I said, it's just super flat and just really anemic bars right here. We're not getting a lot of action aftermarket, but it had a huge drop. So definitely you wouldn't want to day trade this. Even super pro guys won't be day trading this. But I just want to show you things to avoid unless you are at a very high level of day trading. Okay, so so far we got Bank of America, Tesla, Nvidia. Yeah, Nvidia would be a great one. Ooh, okay, right there. All right, and then let's just go with the SPY today. It's going to get plenty of action. Well, it always does, but today, with it being dragged down by the NASDAQ, actually looks a lot like Nvidia. and, but we can keep our eye on SPY as well. Okay, so hopefully you guys know what to look out for if you're day trading. If you're swing trading, I would be paying attention to XLRE, XLU, XLP stocks, so staples, real estate, and utilities. Oh, let's not forget energy. Yeah, energy is looking excellent. So energy would actually be my top choice. That's like the strongest, clearest trend. XLU, XLP, XLRE are still turnarounds. So we haven't completed the turnaround yet, so we're not super sure about them. But XLE has been strong. It's done its turnaround on the dip right here. So XLE would be my top candidate. And then I'm going to be paying close attention to SMH. I want to see if it remains strong relative to the QQQ. All right. Let me know if you have any questions, and then I'll be happy to answer them in the after session. And I'll see you there. All right. Good luck trading, and hopefully you have a very profitable day. All right, see you guys later.